Hey, everybody. Today on Industry Relations, we're going to be talking to David Blum and how he's trying to make the Bloomberg terminal for real estate. Or is that Bloomberg? We'll find out. This is Industry Relations, a podcast that's at the intersection of real estate and technology from an insider's perspective with Han and Greg Robertson.
Hey, everybody. Welcome to an episode of Industry Relations with Rob and Greg. I am obviously your co-host, Han. And with me is my other co-host with the wonderful hair, Greg Robertson. Mr. Robertson, how are you?
Hola, Rob. I mean,
hola.
It's becoming a hair podcast. I don't know.
I know, right?
I'll take the compliment. I'll take the compliment.
It's because then I hope by this time, this is sort of our new format. People can actually see us as well as hear us. And now I think they can all see my hair is just turning white and gray, and yours is black as to tell you were a teenage boy. But great to see you. And I think we have a pretty interesting show planned for today. We wanted to bring on a special guest to talk about, and this is a little bit older, because he wrote about it in terms of sort of a 2022 predictions, but I think there's a lot there that I think we can learn from. So let's bring in Mr. David Blum.
Great to be here. I think I'm way ahead of both you guys on the white hair color. Way ahead.
Well, thanks for joining us, David. He is the co-founder of Plunk, which is a prop tech company, startup, relatively new, right? How long you guys been around?
Well, my co-founder and I started experimenting around with what we wanted to build a couple years ago, but we got into market and got our seed funding last May.
Okay, right on. Right in the middle of the pandemic, as it were.
Exactly.
Great time to start a real estate prop tech company.
What would be your elevator pitch for Plunk, David?
Well, we're bringing the next generation real-time analytics platform to residential real estate.
Oh, and we're going to get into that, I think, is the substance of this, because one of the reasons why I wanted to talk to you is you were part of the year-end sort of predictions for 2022 on the Geek Estate Mastermind. And you wrote some real interesting kind of things on it. I'm just going to really briefly talk about, this is what you wrote. The world's largest asset class both demands and deserves better than home price index reports based on a data limited approach, published quarterly and reflecting information that is more than 60 days old. As Wall Street moves intentionally into residential real estate, there will be an increasing push to develop same analytical forecasting tools that enable confident, frictionless investing. Okay, let's talk about that, all kind of together in detail. The first, I think, would be just tell what is wrong with kind of home price index? What's wrong with the way we do things now?
Late. It's driving a boat, looking at the wake behind. It's not useful for the lightning fast decisions that so many entities are trying to make, not just homeowners, but lenders and insurers, and now Wall Street coming into this investment class in scale and programmatic buying. They expect a Bloomberg terminal telling them what's going on in real estate, and it's got to reflect current activity. And it was surprising to Brian and I, my co-founder, that there just wasn't any kind of real-time understanding of the performance of real estate.
So how was this even a problem you guys saw? Like, were you doing real estate investing? Like, there's always a story, I feel like, with prop tech, startup founders. Like, how do you guys even identify this as an issue and to tackle?
So I first got my feet wet in real estate in 1994, working for National Association Real Estate on bringing listings online. Right. That was really the start of Realtor.com, what was Home Store, and then went through several iterations and became a series of properties that got broken up. And I have not been in real estate since that endeavor. Wanted to get back into it because I, on a personal level, am very active in real estate. I've always loved it. That includes being a carpenter and a home builder during high school and college. It includes being a landlord with multiple family rentals, 1031 tax exchanges. I've built several new houses. I like the process of building a new house more than sitting down and enjoying them, apparently. I've got several recreation properties I enjoy. I did the original I think, or one of the original shared fractional ownership.
Oh, wow. Okay.
Out of college, I had not anywhere near the money to afford a second home. But I sold quarter shares to my high school buddies that were all in a similar position to me. And we built a second home 30 years ago, which I still enjoy today.
Wow. Right on. So you just saw analytics and this valuation kind of as the key thing. Now, Greg happens to be in that business.
Yes.
I mean, what do you think? Is this speed thing the real gap?
Yeah, I mean, so a couple things. I would kind of disagree with you. Like, I think there's a lot of people trying to do this or have been trying to do this forever, right? I mean, House Canary, Black Knight, Zillow. I mean, everybody's trying to kind of, unless I'm not understanding what the thing is here, but everybody's trying to come up with the best way of evaluating what a home is worth as quickly as possible. I don't think anybody wants to make it, you know, slow or bad. I mean, they want it to be as accurate and as most, you know, as recent as possible, right? So I think there's a lot of people who have been trying to figure that out. Am I wrong?
Well, we run a model on every home in America, 24 hours a day, 7 days a week. And we set our models up such that you can play with the inputs, which allows you to do what-if scenarios on what the house would be worth if you remodeled it and changed its configuration, added a bedroom, upgraded the kitchen, just a finished grade level or two. So by saying that there's been a lot of people attacking this problem, the granularity has not been at a home level. It's been
what is his estimate?
Sorry?
What's his estimate?
His estimate...
that's every home, and I mean, that's their whole value proposition is they've done valuations on every home in America.
Well, and many other people have too, but it turns out a home's value changes price every minute, just like a stock. It's going up with the same pressures, the same market forces that change people's belief in what Tesla is worth or what they are willing to spend on a brand new car. There's all kinds of economic forces that is non-real estate data that shape and form a local real estate market. If you look at Seattle, it's job growth in the high-tech sector. These are the jobs, you know, this is scary to me because we compete in this labor market here in Seattle, but, you know, Amazon just raised their base pay to $350,000 for incoming engineer. And it's already been impossible to compete at the wage levels and the RSUs that they're able to offer people. That's what's driving our housing market. Well, it turns out there's lots of data sets in the Seattle area we can input into our learning models and get much more accurate about what is going to move home prices going forward. We look at.
I guess I understand. I mean, you're saying, you know, it's not a granularity thing. I mean, Zillow is doing that with every home in America. You're saying your algorithm is better than what Zillow and others are doing because the data points you're using will make it more up to date or more recent than what's being done now.
It captures buyer sentiment and the forces that are going to move the market. Two, it's dynamic. You can change it in real time. A realtor can sit down in a listing presentation, take pictures of the inside of the home. Zillow has no idea what the inside of a home looks like, and they admit that. We allow you to take a simple smartphone.
Hold on. That's not entirely true, right? I mean, I just remember Zillow takes images of the home, and I think it was announced about 1.5 years ago that they use those images that are now part of this estimate, right? I mean, that's
not happening.
Am I right there, Rob? That sounds familiar.
I don't recall if it was the estimate or for the offers product. Right. But I know they were talking about, I mean, everyone's constantly looking for ways to make things more accurate. And that's kind of a related question is, okay, I mean, I think what you've described, David, is kind of the holy grail on the valuation side of things. I mean, I would have thought that the iBuying guys would be 100% obsessed with this, right? Because they're actually putting their own money behind these decisions. Like, in a way, I guess what I'm wondering is what you've built essentially the same thing that, you know, Open Door and Zillow Offers and all these guys.
Hopefully it's not what Zillow Offers was using because that blew up in their face, right?
Again, it didn't. Let's be clear about this. Their algorithms were never wrong. It's that human beings overrode what the algorithms told them it was worth. So that's a whole different.
I'm glad you pointed it out, Rob, because the official word has been, and we don't know why, but Rich is a very smart guy, and he definitely threw his algorithms under the bus. But we do know that they weren't paying attention to their algorithms in respect to what they were offering homes, and we were able to track that.
Right.
So their reasons aside, this challenge of understanding what a home's worth right now, Zillow has offered their estimate as a marketing tool to start the discussion.
Right.
And we never would say that, and we would never claim that. We're just going after a different level of ground truth and a different level of real time. So we can put a home's value literally on a ticker and show you how it's changing daily. And then again, of course, we can dynamically change it based on new facts, new information, updated, corrected facts, and pictures of the home, both inside and outside. And finally, we can predict what the home would be worth if you remodeled it before you spend the money. And that's the level of comprehension we're bringing to evaluation.
Yeah, and going back to what Rob was asking me, the myth about Cloud CMA is that it comes up with we have our own algorithm, right? Which is, it doesn't do that. It's a presentation tool. So our belief has always been that nothing's going to beat the eyes, ears, and nose of a good agent who knows the market to use you guys, use his estimate, use whatever as input for them to kind of take all that as a human being and then put what they think what they think the value should be, right? But what I always have these problems, these algorithms or apps that use algorithms, and I know that's not exactly what your guys are doing, and it's my Twitter handle now. It's Zillow can't smell the cat, right? It's just there's these undefinable things, like when my wife walked into the house, we're here like, wow, this is it, right? Or those things like that, right? So it's like, it's just, to me, I've always been very just dismissive, probably is probably the worst thing I could say, but just like not a really believer that a computer can just a home is weird. It's just, to me, a special case, and I know I'll probably be proved wrong, but I just never felt that there's going to be any algorithm that can really accurately come up with that price.
Well, no algorithm is going to figure out how that client is going to keep their house clean for showings and present it properly, and that's an adjustment a realtor has to make. The smells, as you mentioned, no algorithm is going to really capture the quality of the view and understand how clients are going to perceive that. But also, every client puts different value on different things. If the house has had a cat in it, one buyer might walk in and say, that's 20 minutes with putting kills on the floor, and I want to change the carpet and the floor surfaces anyway. Another client's going to turn around and walk out. So you always have that. That doesn't mean that we don't have a lot of data and we can't give better guidance to both professionals in the real estate business as well as homeowners and home listers and home buyers. From our perspective, we're trying to get ground truth. That doesn't inform a listing strategy. And an agent still is in charge of a listing strategy, where they want to price it, given what they know that no algorithm can capture. But we can get them a lot closer to ground truth. If you look at a CMA, they make adjustments for old closings. They make adjustments for current active listings, but they do it in a non-data way. They do it in a way that isn't driven by consuming lots of information and making data-driven calculations to adjust the price of a home. And we can do that. Machine learning there's no competition between humans and machine learning for crunching lots more data and making data-driven adjustments. And that's what we want to do.
Okay, so there's a lot to dig in there, but I guess to both you guys, because it so reminds me of that conversation we've been having around like appraisal and UAD and all of this stuff. Like one of the things that constantly comes up with this is, what do we mean by accuracy? Right. So when you say, so for example, take Plunk, you say, okay, we can predict what if you were to add a kitchen or if you were to do this type of renovation, here's how much the home value would go up. Is a definition of accuracy how close you are to that date and how real that is? In other words, if you say, listen, your home is worth 500, if you did these 4 things, it's going to go up to 525. If you do those 4 things and you put the home on the market and it's at 550, does that mean your algorithm, you know what I mean? Like, is that inaccurate? Is that accurate? How do we think of accuracy in this context? I guess my question.
Well, there's multiple levels of accuracy there. First is the value of the home impacted by that remodel, but then there's the cost, and we're attacking those as well because the range given by most sites are just not useful. You know, add a fireplace, $5,000 to $50,000.
Right.
Okay, that's not helpful.
Yeah, right.
So take a picture
between $1 and $1 million. Yes, thanks.
So and you know how much you can put into just an appliance package in a kitchen. But if you take a picture of your desired kitchen and you take a picture of your current kitchen and you send it to us, we will give you a defined accuracy. We'll give you a line-by-line list of appliance packages, linear feet of cabinetry, labor, installation of fixtures, and you can hand it to a contractor and negotiate the fine details, not feel like you're anxious about talking to a contractor who knows a lot more about construction than you do. So accuracy to us isn't so much about we want to test this, and the models improve as we get more data, and they just get better and better, and they're already done at a local level, so we know what when lumber goes up in price because of a shortage or logistics problem. Copper and plywood last summer is a great example. Yeah. We can make those adjustments and help people recalculate and be nimble like that. But the other part is just understanding how to empower somebody to make that decision. If you've got a client and they love that home, they love the neighborhood, they love the way the house sits on the lot, they can't live with that kitchen. Every realtor knows how many times that happens. So now you can whip out a phone, show them inspirational photos, show them how they could remodel that kitchen, show them what it would cost, how much it would improve the value, what the ROI is on that. And that's a real service to empowering a buyer. And of course, a lister who's trying to figure out what projects to do before they get the most for their home.
Yeah, and that's great, David. I mean, to me, well, going back first to kind of Rob's question, what is the goal here, right? It's funny because it's the price, what the list price is. I saw a funny meme the other day on Twitter where it was like the meme basically said that when you're inputting a listing into the MLS now, they should change the field name from list price to opening bid. Right? Because of all the multiple offers happening, right? It's like it's less of pricing something out. It's more of like, what is the auction? When it starts on there, you got to have that guy that talks fast. Hey, 1,000, 1 million, 1 million, 5, 1 million. It just becomes that type of situation. So I think the goalposts have changed. I mean, I don't want to say this. Right. I think this is going to hurt me saying this, but it's like, is this CMA even valid anymore right now in some of these markets? It's crazy because it's becoming an auction type of situation. But going back to David, what David says, I think a good CMA it does a number of things, right? Number one, it just establishes the person as a professional, right? Number two, it shows they did their homework. And whether it's a limited data set like what the active listings are going for, what the sold listings for, or even more, what you guys provide, that's great. But the third thing is getting the listing, getting them to sign on the dotted line. And all that is sales. And in sales, it's all about overcoming an objection and going back to close, overcoming an objection, back to close. So what you said, David, is a perfect example of a common objection. Hate the kitchen, right? And if somebody's able to kind of show them really quickly in some manner, like, well, let's overcome that objection, let's get you to sign. That's very powerful, very powerful.
So I grew up in sales, love it. Love the profession, but I think I was taught at an enterprise level to be kind of a consultative salesperson. And once I really understood how to make people heroes and to give them what they were trying to get out of life, it changed. And I know most realtors aspire for that kind of impact on their clients, but we want to change the narrative to being financial advisors, not transaction facilitators. So if I'm dealing with an agent and, as you point out, they are doing their homework, they are professional, and I see that they have a grasp of analytics about this house. This is my most important, biggest financial commitment. For 97% of Americans, it's 80% of their net worth when they retire. And it shelters, it builds relationships, it nurtures families, but it's also the way we pay for our retirement, our college, our bass fishing boat, whatever it might be. So we want the agent to come across as a financial advisor and be guiding them to get the most economic value out of their entire homeowner journey, not just their first house, second house, third house, whatever it might be. You know, they spend 7 to 10 years in a house. Many people want to fix them up, update them as they live in them. We want to show them how they can get the most out of that process. So we're just trying to put a Bloomberg terminal behind the realtor. Right. We're trying to give them analytics that show their client, I understand this house, I understand this asset, I understand this financial investment, and I understand the alternative places you could put your money, including investing more into this house, and walk them through all that. And so walking them through remodel considerations, walking them through, do I go and get a different house today? Do I sell this one? Do I rent it out? All those are analytics we want to provide right front and center and have it be real-time, current, accurate. So that allows the realtor to then interpret which analytics make most sense for that client and advise them through that. And that's the best way to close. That's the best way to ensure their commissions are protected, their value added is fully contributed.
Okay, but I guess I'm still a little bit trying to pick up on this idea. Okay, that's all true, but what both you guys said is absolutely true. It's a sales tool, it's a conversion tool, it's a lot of those things. But you know, David, kind of the vision you painted for 2022 is this notion of, you know, ground truth pricing, right, for real-time tracking and monitoring. So it feels like we're going past just the notion of sales, right? This isn't just overcome the objection. This is actually trying to be something more like, I don't know, like to your point, like a Bloomberg terminal, because you would think about accuracy differently. You're talking about past historical data or real-time data. Like if Bloomberg says that silver is whatever, $36 an ounce, right? And I go to some silver exchange, I expect it to be $36 an ounce. It has to be, that's accuracy, right? It reflects reality. With predictions, it's never accuracy, right? Because it's all models. And what brings to mind is, like, you know, the technical analysis guys, the chart wizards that are looking at all these formations, like, okay, well, we have a double shoulder here, so we should see this. And it's like, but it doesn't happen. Okay, so are you wrong? Does that mean your charts, your analysis is inaccurate? Like, how do we think about the word accuracy, I guess, in that context, what I'm trying to get at? And so in a way, David, what I'm wondering is, your mission on the one hand seems to be empower consumers, empower professionals to be able to make smart decisions. And on the other hand is this notion of real-time tracking of portfolio and real estate value. And the two are a little bit at odds, right? I'm just trying to resolve that. Like, how should we think about that?
I think this is a response to the number of people who have come to us with new ways of buying, selling, managing real estate. If you look at fractional shares, a company in Seattle called Arrived Homes, buying a percentage of your equity, like HomeTap, Noah, Unison. They get into situations where they need to see a value for a home and make lightning fast decisions. I mean, you mentioned the iBuyers, exactly the same. Mm-hmm. You know, part of the push on Zillow was to compete with Open Door. They had an internal project called Catch Up, just buy homes. And they had to outbid Open Door, which is part of the reason they were driven up in certain markets. Being able to go to a source where people can agree on the price of the home and it's fundamentally substantiated is going to unlock a ton of different models that are trying to be brought to market, but they're currently too much friction in terms of, what do I pay for this house? What would it cost to remodel it? How would I put it? If I'm in Invitation Homes, let's take an extreme example maybe, because they own 80,000 homes. They want to have their capital allocated in the right areas, the right geographies. They want to see what their cohorts are doing today. If I can create a model that runs on every home, I can index any number of homes, any segment I want to. I can look how Seattle performed today as a real estate market. I can look how waterfront homes performed today. I can look how my 1999 cohort is performing today in the Southwest Sunbelt. Okay. Mm-hmm. So we have ability to create those indices and allow this asset class to now be analyzed, traded, exchanged in real time. And I go back to Arrived Homes. I buy a share It's 3 years later. I want to sell it. Okay. So I can, they have a first right of refusal. I can put it out in the market. What's it worth? Am I going to go get an appraisal? Am I going to go through that whole process, or do we have a liquid market for that? I'm Noah, and I bought 10% of your home. And so it's 7 years later. I'm the homeowner, and I want to remodel that home. I want to put my own money in that home and remodel it. Do I owe Noah a percentage of that equity? No. I need to recalibrate, readjust what Noah's basis is in that home based on my remodel. So how do I do that? If I have a service that can tell me what that home is going to be worth remodeled, and I decide to put the money in, then I can adjust the basis. Everybody's happy. That's the kind of use cases that we're trying to meet here with a valuation metric that people can agree to and not have a bunch of time and process and cost in getting there.
You know, the one thing that I think that would add so much value to what you're doing, and going back to your comparison to like stocks or whatever, and this is just starting to come up, is these offer platforms, right? So that now you could have, if you could tap into, if that was more widespread, like something that like, you know, Glide was doing in owner or open, MLS offers, I think is another one, but you know, where the transparency there is for real, where you can, you know, you can see the bids coming in and then add that data set into what you're doing. Now, to me, that's ground truth there, right? Because what you're not able to see is, you know, from when a home goes active to pending, you know, until it goes to the change of the status goes to sold, then you see the difference between the active price and what it was finally sold for. That pending thing is kind of you know, it's really just, it's blurred. We don't know. And it sometimes that process takes a long time, but to have those real-time offer data coming in, that would be fantastic.
Yeah. And of course, that's really useful to our model to see bid data. So we're working very hard to try and get access, not just to the offer platforms, but to general bid data that's, you know, realtors have no incentive to really publish bid data, but we're working on a variety of strategies. We're hopeful to get more access to that kind of stuff going forward. But that's absolutely true. You know, if you inform somebody, you know, if you go to a Christie's auction or something, you know, you're going to get pretty well informed on what something's worth before you just start bidding on it. Look at a company like Sunday that sells market homes that, you know, aren't listable. They're never going to be on the MLS. They wouldn't survive an inspection. So they're sold to people that have, I guess, a
certain set of skills.
A certain set of skills. And, you know, so to give them ideas of what that home would be worth fully renovated is a particular motivation to say, wow, okay, I can see, you know, not everybody can visualize a fixed up home. Some people can, some people can't, but most people aren't as visual that way. So giving people guidance on what a home's upside opportunity could be fully renovated is a real value to a bidding process like that. I don't know how it always fits into an offer platform, because sometimes if there's some authority on value, that could halter some of the exuberant bidding. So those are early discussions. We're not sure how we fit into there, but there's a lot of area for ground truth for sure.
So, Greg, I mean, we've been around the MLS industry now pretty much our whole career, right? And one of the things that continues to resonate as people talking about the MLS is the gold standard of data, right? It's the measuring stick by which you measure everything else. You know, so when you say like Zillow's data is inaccurate, it's because in comparison to MLS data, right? Are we talking now about some sort of future where the MLS is no longer the source of truth and something else is?
No, I think you know, I think David agreed with me here that, you know, in order for his models to work, he wants the best data to input, right? It's that old computer adage, you know, garbage in, garbage out, right? So if there's not and I think, you know, the way the model of the MLS is set up, it encourages people to put it all in one place and there's policies and procedures to make sure that that data is good, and those can power models like the one David has, right? So without that kernel base level of data from an MLS, I think all these models fall apart. If you have to go anywhere which way to find this data, who sold it, when did it sell, just the aggregation of the data set itself from an MLS, I think is invaluable to all these models.
Without question. In fact, I got to use several sources because I need images too to train my models. I can't train a machine learning algorithm on Los Angeles homes and expect it to be accurate in predicting value increases for homes in Atlanta, for instance.
Right.
They just have different lifestyle, different format, different layouts. It's all different, and a model's not going to perform in Buckhead like it would in West Hollywood. So they have to be trained independently. So we get a couple different MLS sources, mostly because we need images, and we have to get those from a number of different players to, in aggregate, get a full footprint coverage. And we get multiple public records because people have improved public records. They've added deeds and liens and mortgage histories, and kind of blended and managed their files more so than others, and they have different geographical strengths. So we have multiple public records, multiple MLS sources just to do what we do today. And of course, as Greg says, more data, the smarter our algorithms are, and the faster they learn and the more accurate they get.
So maybe I'll ask you the question that I asked, what's his name, Nick. And so according to Nick, who's an appraiser, we interviewed him. He said the most accurate database for properties in the country is Fannie's universal appraisal data set. He couldn't remember whether that was available, whether it's, to the public or for purchase. Do you know if the UAD is available? Do you guys use that?
We do not. I listened to that podcast with great interest. Yep. Nick and I talked for several hours afterwards. We had a great conversation. Right. And I'll tell you, we can help Option immensely. But I'm not going to get the rigor, the discipline. We get our data, by the way, from MLS as an appraiser. That's our permissive right.
Okay.
We're not a reseller of homes. We don't put online listings on site anywhere. We don't have an agenda. We're not trying to buy, swap loans, send you to a realtor, any of that. We're trying to empower realtors with the best analytics. They've been defensive for a long time against, the Zillows and the Redfins and the data-driven disruptors, and we're trying to give them the best weaponry. But the idea that the MLSs are the best source of data. We know how dirty the data is, the fat fingering, the number of inconsistent. And remember, there's only 6 million homes sold every year out of 116 million or whatever total. 80 million homeowner occupied. So, 7.5 years, 8 years, the cycle of getting the data improved and complete is just not going to work. So we constantly look for more sources to get more angles on more things. We're looking at drone footage, and taking data off of imagery is going to be one of the major themes over the next few years. I can tell more than just the shape of the roof and how many years it's got life. There's a lot of things I can do to project lot sizes and boundaries and how people can remodel and expand and amenities, and it'll just get smarter and smarter. But appraisal database, if it had more complete coverage, it would be, maybe panacea. But
okay, I was just curious because, again, we're talking about a government-sponsored enterprise. You would think if anybody has to make that data at least available, maybe that you had to pay for it to access, but you would think that it would be a GSE, and I know about it, but I can't get a straight answer. Like, yes, you can go to Fannie and pay them this, and you can get the UAD in a whatever form, and you could do some stuff with it. All right, I was just curious. But you guys are an appraiser. So when you talk to Option, right? I mean, in a way, aren't y'all like, if you're fully successful, you've achieved your mission, it kind of feels to me like then you won't need appraisal anymore? No,
it's back to Greg's point. There's always going to be a need to put eyes on that house, okay. Professional eyes. Okay. learned eyes, informed eyes on that house, I think we could do an amazing BPO service.
Okay.
Where somebody drives by, confirms, but all the report is assembled, all the data is given, but it's still a licensed broker that's familiar with that specific locale, reviews that information and signs off on it.
Got it.
And
okay.
The time and the cost and the energy of doing a BPO considerably, but we're not going to be a full appraiser that really should go beyond where they go. I mean, a lot of appraisals don't even go inside the house, don't see inside the house. They don't, as Nick said in your
yeah.
They don't have floor plans. They don't know where walls are. They don't know the condition of the walls, and you certainly can't see surfaces and wear and tear in a lot of parts of the house. So, I think the appraisal, is always going to be an important thing. I don't know what percentage we can solve, but there's a lot of pressure in this industry, of course, to appraise houses faster. To these refinances are a great example. You already know a lot about the house. It's the same owner. They complain about paying for another title policy. They're going to complain about another expensive appraisal too, especially if they can validate their house through pictures from their smartphone. And there's ways to do that, as Nick discussed as well.
Yeah, and I think, and if I'm correct, Rob, the desktop appraisal, there was a certain subset that they could do that on only. Right, it was houses between that hit this for lack of a better thing,
90
right?
LTV and
right. Yeah, that's right.
But it's all regulation. I mean, but one of the things I remember, that I was having a conversation with Nick about, it's like that's all in the service of some sort of a mortgage, which is a regulated product, and typically these mortgage banks are using like depositor funds. So, there's all this regulation, layer upon layer of regulation, and the thing that I started wondering about is, okay, now we have this rotation of capital out of bonds and equities into single family residential, big hedge funds, the BlackRocks of the world, private equity. And I remember having this conversation, like, do those guys care that much? In other words, if I'm looking to buy 10,000 homes because I need to place $10 billion worth of cash that I just pulled out of treasury bonds, an error rate of like 3 to 5%, I don't care. I'm not getting a mortgage. I don't need a BPO for that. All I need is some level of reasonable certainty, so I can make that investment decision and say, okay, you know what? Buy this home, buy for $350. It turns out the real value is $375. Okay.
It's just that, as you explain that to me, I get credit default swaps. That sounds to me like, let's put them all in tranches and we'll mix these things with those ones and we'll mix these with those. But all together, the risk is very low. And it's like I get kind of like the hairs in the back of my neck start sticking up because that sounds really, really like I'm watching that movie, The Big Short, right now.
I'm the same way. In fact, they brought those back to market under a different name. I can't remember what they're calling them now, but we're already back in that business.
Yeah.
But all I would say is more data helps.
Right. All right. So, what do you see as the biggest barrier to this sort of data future? Like, what are the challenges that kind of get in the way for you guys? I guess because I'm assuming you haven't fully achieved your vision yet. Or have you?
Well, what we did was last summer, I guess in May, we launched a product covering 1.1 million homes in the Seattle area. And we did edge cases and, whack-a-mole and put our product through the paces. Also, the consumer experience. We had dozens of realtors using it with their clients. And we got so much positive energy in the fall at the conclusion of that, we changed our strategy a little bit and decided to go national much quicker than we had ever earlier had anticipated. So we're in a national build out right now, going from 3 counties to 3,600 counties. And we have several launch partners that demand us to be national in our coverage. So that's the task at hand. We're doing what we did in Seattle for 3,600 counties. So we'll
as a vendor myself, what's the business model here? I'm just curious. Is this like an API? Can I buy 1,000, API calls and like in Cloud CMA throw you an address and it's going to throw me back a number. And does that number dynamically change every minute, as you say? Or, I mean,
every second.
Business model, yeah.
You want it, yeah. So that's exactly right, Greg. Any modern data company, analytics company is going to make their product accessible, and accessibility is our entire strategy for our pricing, go to market, everything. So yes, we have API calls, so you can embed it into your current layout, your current delivery of information. That's true for MLSs we're working with. That's true for CRM platforms. That's true for large brokerages. We also have these embeddable widgets, which are entirely self-service. So you can come and select a widget. Could be the home ticker for people that are just trying to mark the value of something. They could be sitting in an insurance company with a exposure on a policy. They could be sitting in a bank. They could be sitting in a real estate office and saying, what's the value of this inventory in my trade area?
The ticker concept is really the visual. You just you can understand that visually, and
it's going to be great in some areas. It's going to confuse people in areas, and it's going to be not appropriate in areas. It just depends. But when you've got an internal portfolio and you want to see what everything's worth, and you can come in every day and see how your entire portfolio performed, and you can go into an individual property, and we can create alerts on that. It's time to move that capital somewhere else. It's time to, remodel it because you can get higher rents. It's all those analytics are going to be part of this. So we have a series of widgets. We have a widget for just the remodel value. That's going to be very popular, I think, with MLSs who are trying to add additional context around a piece of property and show right from the start, certainly a home's value, but what could it be worth? You can actually search a property map by what we call Plunk value, the fully remodeled value of a home. So you can look for flips on a map, a heat map of flip opportunities. So we'll have widgets. We'll also have subscription packages which give enough volume for any single agent or small team, enough access to all these on a volume basis at a fixed price, so they know they're not on some sort of a meter all the time. So we're going to try and meet the needs of the buyers on their terms and make it just really accessible and easy to use.
Cool. It's pretty neat. It is a future. So like I said, so that's what you've done. Have you kind of fulfilled your mission, your vision when you guys launched this company?
Oh, no. So, our North Star would be probably the Bloomberg of real estate.
Okay.
We need to know something right now that's happening right now about real estate.
Right.
We're there.
Sounds like a good title for the podcast there, the Bloomberg of
There we go, Bloomberg of Real Estate. So what's the challenge that you need, that's, what are the barriers to that happening? Is it just simply data? Is it consistent data? Is it what is it?
Data on every home in the country, I imagine.
Yeah, it's easy to compartmentalize my answer. On the technology build out, the data science approaches that have been advanced in the last few years has all made this possible. And we were surprised how well they've worked. So this is not a technical challenge, it's a data challenge. On the go-to-market strategy, I think our only headwind that we don't have all the answers for, and we may never have all the answers for, is people's view of AI, machine learning in a dystopian world where, this is the evil application of technology. We're going to be working very hard to show how these are just functions of what data you put into them. They can't be biased if you don't give them data to bias on. We got involved in a PR opportunity. It was in San Francisco. It's a terrible story. A couple had their home appraised. They didn't like the outcome. They didn't feel like the appraisal was fair. This happened to be an African-American couple. So they tried an experiment. They had a designer team come in and somehow change the furniture and the layout and all the pictures, and they put in pictures of a white family, got the house reappraised, and of course the appraisal was much higher.
I remember seeing this.
Yeah, it's a terrible story. And so we got in a dialogue about how our algorithms can be set up to be completely blind of that information, right?
Well, that was one of the things listed for this desktop appraisal thing with Fannie and Freddie, right? I think I remember reading something that was one of the reasons why they we're doing this. Not only the shortage of appraisers, but this type of, like you're saying here, you know, the blindness here. Yeah.
We should be irate about FICO scores. We should be irate about still some of the built-in redlining and biases in lending that has, you know, over the years, just by purposeful intent or unconscious, you know, bias, has created an unfair, you know, situation for different races, different ethno groups trying to get the same access to housing and financing. And so this is where our technology and data science can add fairness and add level playing field. And that would be, you know, something that we want to do. But we also know that we can't ever think that we're going to replace many human aspects of buying and selling homes. As Greg pointed out, we're never going to tell an agent how to list, how to sell a product, a house in a certain location. They're going to be the local experts. They're going to know the clients. They're going to know the client's objectives, the emotional concerns clients have. So we're not telling them where to list a house. We're trying to get them to closer to ground truth. And there's a lot of things we can do to help that. And, you know, I sold a house last summer. It was a rental property I've owned for many years. I went to a realtor who was a local expert, 20 plus years in that very specific narrow market. And I asked him, you know, to go through the process. It was actually a house that may have had some commercial, someday it will, but I think I got great advice that it wasn't a commercial, but still a residential property for a family. But the CMA they went through was so full of errors. It was embarrassing, in my opinion, for the realtor, and was way off. The market was moving so fast, and this was a red hot market, not a white hot market, but it was still moving so fast that even agents in the business every day weren't keeping track of what was really going on in that market. You know, so we went through this challenging discussion. We ultimately listed it at what I wanted to list it at. And of course I had a little bit of analytics help and it sold right away. Probably could have got more for it even, I guess, if I had created some sort of a bidding environment. But I just felt, you know, this was a house that sold for $520,000 and he wanted me to list it for $450,000. And I'm not one to try and create bidding wars and see who's going to pay me the most. That's just not how I roll. But it just reaffirmed to me that, you know, he could have gotten a lot different guidance. It would have helped him. It would have helped me. It would have been a higher integrity and interaction all the way around. He could have still decided how he was going to market and where he was going to market for buyers for that house, but could have benefited from a lot of analytically driven advice.
All right. Dude, this is a heavy-duty conversation, but I think it's one that our audience at least can appreciate. Because think about it, like data, understanding industry structure, this is right up our alley. So, David, this was great. Thank you so much.
There's no industry going through more attempted disruption before. I couldn't be more excited to be in the middle of this. This is what we thrive on, us entrepreneurs. They're, you know, trying to find opportunities, and there's nothing but opportunity in this area. But we got to be good listeners and serve the people that, you know, are making a living here in this industry, and we're excited to do so. So, and you guys know that better than anybody. So,
all right. So, if people want to get a hold of you, how do they find you, David?
Well, we're at getplunk.com. And I'm about as easy to find as anybody. I've lived my whole life in the tech career, so it's all documented in every possible online.
All right. And just before I let you go, I have to know, how'd you come up with the name Plunk for this particular application?
Plunking?
Yeah. This was a long and the methodology followed, you know, branding 101. We wanted a one-syllable word. So I literally took, you know, the entire alphabet and put it in a matrix. We came up with all the one-syllable words that just hadn't been taken. We found them, and then we tested it, and it just put a smile on people's face.
Yeah. Sometimes that's all it is, right?
And
so I can think of some other one-syllable words that probably would not have been appropriate for.
Oh, no. But you know, the thing is, it's got to be unique and memorable.
Yeah.
those two things, you've kind of nailed it. And we can ascribe the persona to it, but it's an empty vessel naming strategy that just kind of made the corners of people's mouths smile. So we went.
All right. Well, wonderful. Hey, thank you very much, David, for joining us for this conversation. And thanks everybody for listening.
It's been great. Yeah. Thank you.
Thanks for having me. Appreciate it.